Today's Block Digest brought to you at Block Hat 571,054. And today, a blockchain made an Oopsy.
Oh man, yeah. I guess if you guys aren't clued in on that, Shinobi's taken on the role of PewDiePie this morning and switched around our entire intro and everything. I always think you're trying to be Mr. Hanky. That's my generation of hearing that voice. But yeah, so we're up there, man. We're back on. Good to be back.
My name is not Shinobi. It is Ninja Poop Flinger.
All right. I guess we're going to have to deal with some of this craziness. How you doing this morning, Janine?
I am fine. I'm just wondering. I'm not getting all of these references exactly. I think the first one was Rick and Morty, but I have no idea what the rest was.
Yeah, you got to live in the meme verse to get all these.
Yeah, I side with Janine now. I don't get anything at all.
All the 9-year-olds out there get it.
All right, so yeah, we got that to talk about towards the end of the episode. A lot to do on that stuff, but yeah, other than that, it's been pretty crazy this past week. A lot of stuff going on. Not too much, but a lot of price talk has been going on. I had a couple meetups, and I was surprised to see an uptick in attendance. And hey, you know what? The spring weather, we actually got out for a bike ride at the meetup. It's pretty cool. So yeah, but what have you guys been doing this week?
Dan Darkpill has gone dark.
What? I thought he came back. I saw him. He came back, right?
He did come back, but he's made his account private, and apparently we have permission to repost his content, which doesn't make sense.
What do you mean his content? You mean my content?
Oh,
that's all. It's all my original content. Everything that I do is completely original, and it's never anybody else's stuff.
Oh no, we have an attribution fight going on here.
Oh, that's always happening. But yeah, Dark Pill. I'm glad to see he came back. I was glad to see he started reopened up that thread again where he keeps asking Kevin Pham about Craig Wright and BSB. It's so funny to see him trolling that guy. Yeah, but other than all that craziness, what's been going on in the news, man? A lot of lightning stuff, huh?
Actually, first, I want to give a quick shout out to Adam or Nopara, Adam Gibson, Chris Belcher, and Max Hillebrand. We actually did a special edition while Nopara was at the Understanding Bitcoin conference and did a kind of open panel on privacy topics. So if anybody hasn't watched that yet, I would highly recommend checking that out. And to toot our own horns a little bit, I think it was actually more fun and educational than the actual privacy panel at the conference.
Yeah, I agree. It was probably the best panel I've ever seen because it seems like whenever Batcher and Adam Gibson and me getting into one room, we don't seem like missing out anything when we are discussing a privacy topic, and our thinking just gets further. It was really great. So check out, guys. It's awesome. So what happened on what's with Satoshi's birthday? PewDiePie monkey.
Satoshi had a birthday again. Another one. He's some age. Apparently, I think he's like what is he? He 10 or 11 now? I don't know. He's not a 9-year-old though, and for that I'm eternally disappointed. But yeah, there's not really much to it. It's just Satoshi kind of filled out some of his bio information on the account forums he had is April 5th for his birthday, and the reason that he did this is actually because April 5th in 1933 was the day that Franklin D. Roosevelt pretty much outlawed the private ownership of gold and took the final step really to prevent U.S. citizens from actually protecting their wealth in something that was inflation resistant. And that effectively culminated in 1971, I believe, which was the year Nixon pretty much completely decoupled the U.S. dollar from gold, but at the same time made it legal again for U.S. citizens to privately own physical gold. And so he kind of set his birthday as April 5th. Or I'm sorry, it was 1975 actually. But he set his birthday as April 5th, 1975 as kind of a shout out to both of these events, the actual day that private ownership of gold was made illegal, and then the year that the financial system was finally decoupled and pushed into a completely fiat-based system in exchange for kind of giving people the right back. If you want to buy into the semantics that rights equal permissions you get to own private gold again. And so, really just a shout out to Satoshi, and, really just, all of the little things like this he did that really just show a much wider appreciation of the economics of Bitcoin and just the overall economy as things that he deeply understood, as opposed to just the narrative a lot of people like to spin or portray that he just wanted to make some new PayPal so that people could buy things cheaply.
Or the narrative of fake Toshi, which is he wanted to, I don't know, end black markets or something.
For sure, yeah. It's not something like that. I swear I like all these little facts and going back and looking at some of the discussions with Satoshi, and it's always a little cryptic, and it's definitely not the character of Craig Wright. That's one of the things where when people buy that, it's like you obviously haven't done much digging it back into Satoshi Nakamoto, the character, and the release and his discussions on Bitcoin Talk, and just the way that whole thing evolved, and then his absence and leaving and why and everything. If you look at that whole side of this space with BSV, it's kind of crazy they follow that narrative. So yeah, like that April 5th, 1975, you're right. Yeah, that's a interesting date to try and put the in, like just that little fact that this is a little time period where gold was made illegal to hold, and there's some reasoning behind that with Bitcoin. It's definitely an interesting little tidbit I like to tell people whenever they bring up Nakamoto or the white paper or just early days with Bitcoin.
Mm-hmm. So I guess any more philosophical waxing about Satoshi, or should we dive into a series of stories that is going to lead to a very triggered ninja poop flinger?
Yes, very quickly, that reading back Satoshi's emails and discussions actually is very, very useful, because I was doing that. I thought it's stupid because it happened so many years ago and it's not relevant, but it turns out it is, because the people who were answering, who were he discussing with, were actually very, very, very smart, and the whole conversation, even if it was just a mailing list, was such a high level and very informative. So it was awesome to read, and still relevant concepts. Those weren't even implemented yet. There you can find ideas about it like nowhere else. Maybe on the Bitcoin Dev mailing list. Yeah, just that quickly.
Mm-hmm. Definitely things people should dive through if you really want to understand the history of the space. But I guess let's move along into a long series of stories involving the Lightning Network that make me want to slap the shit out of a bunch of people and ask why half of the people building things on Lightning are complete fucking retards. So firstly, Bitrefill for a while now has operated a service called Thor, where you can effectively pay them to open inbound channels to you to provide liquidity for receiving payments. And that service is really it's something to be expected. It's probably going to be a very normal and widely seen service in the space involving Lightning Network the bigger it gets. But they've recently announced a new service building on this called Thor Turbo. And pretty much the idea behind it is effectively you can buy pre-funded channels with liquidity on your side and spend immediately. And really, like this kind of, there's not really a lot of details, so I kind of have to speculate here to fill in a bit the different possibilities, and looking on their GitHub, everything is pretty much months out of date, and I didn't see any repositories that were in any way relevant to their Lightning projects. So I wasn't able to go through the code and actually try to inform the speculation anymore. But effectively, the first way I could see this working, which makes absolutely no sense, would be to pay for these channels over Lightning Network. And that just makes absolutely no sense, because if you're going to buy a channel with spendable money with a Lightning channel that has that amount of spendable money, that makes absolutely no fucking sense. You have the money in a Lightning channel you can spend already. So that possibility I'm going to completely discount, as I don't think anybody in this ecosystem working with Lightning could possibly be that stupid. So the other way that I see this is you're paying with it on chain or with fiat. And really the same kind of problems in different ways manifest themselves regardless of whichever one that is. But really this comes down to how they actually manage a few things. Pretty much how they manage looking at the transaction on chain, because the whole rationale for this is that you can pretty much just get this channel created and start spending without things being confirmed. So the real problem here is this has to in some way rely on unconfirmed transactions on both sides. In the case of the channel creation, they're creating it for you. It's made connected to them. So even though it's unconfirmed, anything that they're routing from that while it's unconfirmed is going through them. And it doesn't really make any sense to me that you would have any kind of situation where you're paying for it on chain that isn't working off of an unconfirmed on-chain transaction. And so really, this kind of leaves multiple ways to double spend them if they are not specifically refusing to accept RBF transactions, which I don't see any mention of on this product page. And really, even if they were to do that, you still could technically try to double spend them. It would just be much more difficult. But effectively, what you could do is just buy one of these channels, and it's instantly available to spend before you confirm. And you could just route all of that money back to another channel that you have, and then double spend the on-chain transaction. And so it just seems like no matter how you slice it, there is some potential to just completely rip them off, because this by necessity is counting on unconfirmed things. And if they're not specifically banning the use of RBF to do this, which I don't see any mention of, then it's ridiculously easy to actually try and double spend this. And like it's really inevitable that this starts happening. And I mean, at the end of the day, it's their money that's at risk. So if they want to take on that risk, go ahead. but it's really just a stupid risk to take. And it's really like it's encouraging an attitude overall that's just not responsible or intelligent. Like the whole security of Lightning Network comes of a channel comes from it being based on a confirmed output. So it's really just yet another example, I think, of irresponsible corner cutting just to throw a brand on something and associate it with Lightning Network. And honestly, I'm really getting sick of people doing this kind of shit while trying to build out on Lightning Network now, because it seems to be like at least half of the shit people are building on Lightning. And like really at the end of the day, if you're going to build things out in an irresponsible way, an insecure way, like just don't fucking build anything at all. Like seriously, like take these bad practices and go fuck off back to the boonies. Like this is not constructive for the ecosystem.
Oof, hard to know what to say there. I mean, yeah, I mean, it does sound kind of just like some Lightning Network gift cards or something, and it's hard to really say like what the use case is on that. But I mean, you know, Bitrefill, those guys were some of the guys leading the UASF charge, and you know, I know that Errorlog's been working with those guys for a little bit. I mean, I don't know what exactly the use case is for this, but yeah, I guess you could say it's, you know, yeah, it's bad practice, and it's not exactly what the Lightning Network is built out to be, like this trustless microtransaction system. But yeah, maybe they got their eyes on something to where they can build out a little profitable niche with this thing. I don't know. Like you're saying, there's not many details out on it now. Like, do they have like a price limit that you can have on that, or is there like I imagine it's small amounts is what I would figure. And
yeah, the maximum I think is 0.05.
Yeah, it's still a pretty good amount. I mean, 0.5 Bitcoin. Yeah. I mean, it'll be interesting to see what they're doing. I mean, you know, I guess, yeah, everybody's got to develop. And when you're developing, you'll make mistakes. And, you know, maybe, you know, everybody doesn't see the full. I mean, I imagine Bitrefill does see the way Lightning Network is going to be taken advantage of and used. I mean, Errorlogs makes really good points on the Lightning Network. So I don't know what they're looking into here. I mean, like you're saying, we've got to get some more details out of this.
I agree with Rick that we gotta get more details, and I'm not sure I would agree with Shinobi on everything, but I don't see that much. Just one quick note here is that we are developers and don't assume we know what we are doing. It's just some of us ends up working on the right projects, but most of us doesn't.
No, I mean, like I am looking right now at a payment request for on-chain Bitcoins to purchase one of these channels. There is absolutely nothing here saying don't use RBF. So like based on everything available right now, like this just looks completely double spendable.
I'm guessing that they've got their eyes on the system. Like they know who they're selling to. There's some sort of level of like information there, like, you know, I guess on their customers to where they assume like this is, you know, these people aren't going to be double spending. But I don't know, like you're saying, I mean, we got to get more details out on this whole thing. But I mean, for sure, they should probably take a look at that, like as to, you know, why there's no RBF in there. All right, so you guys got any more comment on this, or we can go into this other thing that might trigger Shinobi some more?
Go ahead.
Yep.
All right, so let me just do this real quick. So we got a couple of new exchanges crop up this past week. A new type of exchange, though, that is looking to take advantage of the Lightning Network. They both plan to use atomic swaps between Bitcoin and Litecoin to create an exchange that is non-custodial, trustless submarine swaps between the two currencies. The first one is Sparkswap, and back in August of last year, they had launched their working alpha of the current software called Sparkswap Broker. Now, just a couple of days ago, Trey Griffith announced that Sparkswap is ready for mainnet in their public beta. He says, quote, We are excited to make this new technology accessible by opening up trading to the public. For the beta, transaction sizes will be limited while we battle test the software, and trading will be limited to BTC/LTC, close quote. In their roadmap, they have plans to add additional currencies. Griffith says they can work with other payment channel networks that aren't really compatible with the Lightning Network, so long as certain criteria are met. Of course, we'll likely see those first additional currencies being Lightning Network enabled. This trading mechanic has been long talked about since the white paper of the Lightning Network. One of the main selling points of using this system is that it's non-custodial. Trey told Bitcoin Magazine, quote, "At no point can either Sparkswap or your counterparty deprive you of your assets. The trade is either complete the trade's either complete or they do not," close quote. This selling point helped Sparkswap raise $3.5 million from these firms: Initialized Capital, Pantera Capital, Foundation Capital, and Y Combinator. Now, an idea like this doesn't come out the gate without some competition. Boltz is another exchange that is using the same mechanic of submarine swaps to handle the back end of their trades. Boltz is still in their alpha testing phase to iron out the kinks, but the plan is to directly take on Shapeshift's former user base. We know from Eric Voorhees' recent interview that Shapeshift lost around 90% of their volume when they instituted KYC measures. So Boltz are looking to capitalize on their loss. They blatantly advertise in bold letters on their site, quote, "There does not and will never collect any data that could identify our users," close quote. Now, Boltz is being advertised as non-custodial as well, but it's still being built out on a central platform, while Sparkswap is attempting to build out their software to create a decentralized platform. I mean, it's almost the same level of trust minimization we see in the differences between BISC and HODL on that. I think we're going to see, much more developments in various exchanges going forward in the future with the Lightning Network. The value proposition that network offers them is worth its weight in development. So this is some pretty interesting stuff. I mean, we're using these submarine swaps for exchanges, but I mean, I think it's pretty interesting, but I got the feeling like Shinobi's going to tell me there's some major flaws with this. What do you think, man?
Well, I mean, I think the Boltz design could be, it could be something viable and useful. I mean, people had a lot of demand for a KYC-less, service like Shapeshift, but I do think that the requirements for inbound channel capacity are definitely going to cause user experience problems when capacity gets used up or runs out. I mean, but that side of things I think could be dealt with things like loop out and the submarine swap things that are being standardized. You just loop things back out and then refresh your inbound capacity. But the Sparkswap thing, I think, is subject to a lot more problems. And that's just because they're trying to do everything on both sides over Lightning, as opposed to the way that Bolt's trying to engineer things, just using submarine swaps and really only concentrating on the Bitcoin side of things being on Lightning. And I think a lot of the problem with trying to do both sides on Lightning, it just comes from the liquidity constraints and implications. And I mean, like, really think about two different models, I think, that are important to think about. One is a model where everybody is directly opening channels with the exchange. And that creates huge problems, even at small scales, in that, think about, I swap Bitcoin for Litecoin. So now, like, you're moving the channel balances, you have some amount of Bitcoin on the other side of the channel. The other person has some amount of Litecoin on the other side, and well, you're directly hooked up to the exchange. So unless that exchange is routing payments and you're also routing payments, you've just lopsided your channels. And unless you trade right back in a short time span to get the asset that you traded for initially back, well, though those channels need to be closed or spliced out to reallocate that liquidity where it makes sense to use. And that's a problem. That's a lot of on-chain activity. The bigger that kind of thing scales up, And it really, I mean, there's still an argument that Lightning allows things to be secure and atomic, but you can do the same kind of thing on chain. And so it's like, you know, how much of a benefit really in terms of fee efficiency are you going to get with Lightning when you're going to constantly have to interact with the chain because of the unique liquidity situation, trying to apply this to an exchange. And if you have people who don't have, you know, everybody connecting directly to the exchange, you still have the same kind of problem. It's just not as bad or as big of a scale. And I think, like, you know, a lot of the stuff people are trying to do with Lightning Network and exchanges like this, it's just not, it's not going to work. Like it'll work now. I mean, it's a nice novel thing, but the more things scale up, the more users you have, the more activity occurring on the chain, and the more expensive it gets to interact with it. This stuff is just not viable in the long term. And it really sucks because it seems like a lot of the stuff people are trying to build on Lightning Network, like you're building some transitory thing that's going to work for a little bit and then just not be practical in the long term. And that seems to be a lot of what I see people trying to build with this stuff. And it's just like, why are you wasting your time building something that's not going to be viable long term?
Yeah, I don't know, man. I mean, this is where, you know, these guys are trying to build out this Lightning Network stuff. And like we said, you know, like a lot of wallets get it wrong. A lot of people get it wrong. And so, I mean, yeah, it's hard to tackle on both the Litecoin and Bitcoin side of Lightning and expect to get some real development there. It's going to be low liquidity. And yeah, I'm sure you're going to run into lots of errors and troubles. But I mean, I guess it's, yeah, you know, I imagine that most exchanges are trying to build out ways to find ways that Lightning is going to help, you know, create some profitability for their infrastructure. What about somebody in the comment, Audio Tweaker, was saying that the Linux Foundation guy made some comments about the gameability of atomic swaps? I never heard of that.
The call option situation, that's not really relevant here. I think the call option gaming that eats up liquidity, that's not really relevant for exchanges where you can put somebody besides the receiver in charge of the payment pre-image. That's more of just like a issue with like making seamless payments across different things. But I mean, like these kind of issues exist for like Lightning and exchanges, even if you're not talking across different cryptocurrencies. Like imagine an exchange that's doing futures contracts and everybody has channels open with the exchange. Well, every single trade, somebody is losing money and somebody's gaining money. So one channel is not going to have enough to receive what the guy just won in a trade, and one channel is going to have a bunch of wasted liquidity because he lost that money. And so you need to rebalance that on chain. You need to splice out of one and into the other. And you need to do that for every single trade of a significant size. So like imagine like thousands of users having to do that constantly for every single trade. That doesn't scale. Like that's not going to be cost effective.
Yeah, I mean, we're going to have to watch it be built out. I mean, Lightning Network is still really so early on in its development. I mean, if you could just think about where we were with Bitcoin main chain, you know, 2 years in, I mean, there's going to be some errors being built out, and it's going to take a while for people to build it the way that it's going to all be trustless and trust minimization as much as possible. And we actually see some real solutions that everybody's going to be happy about. So, yeah, like what's going on with this? Well, if you guys got any more comment on these atomic swap exchanges, we'll go into this hub wallet. All right. So yeah, what is it, man? Does it make LN a Breez or what's the deal?
No, this, and I do have to say up front, the guys behind Breez Wallet, they're being honest and upfront about a lot of the downsides and their model. But even saying that, like this wallet is like this wallet is everything a Lightning wallet should not be. And it goes back to the same shit with like the Bitrefill Thor turbo service. Like if you're going to build things completely irresponsibly, just fuck off and don't build anything. Like you are normalizing and trying to make widespread extremely bad practices in this space. So the whole model behind the Thor, or not Thor, the Breez wallet is it's hub and spoke based, a very shit security model, and the entire wallet is set up so that it has absolutely no on-chain functionality. Like everything in this wallet is literally just done on Lightning. It cannot make on-chain payments. It can't directly receive on-chain payments. The whole thing is just only Lightning. And the way this is structured is you start up the wallet, and pretty much it opens a channel with you by default. So Breez is operating an actual hub in the hub and spoke sense. And whenever you make a wallet, it opens up a channel. It says in the article Kyle Torpy wrote of 0.01, but when I tested the wallet, it only opened one for 0.005. So it starts off, they're opening a channel with inbound liquidity to you. The only way that you can receive money is directly over Lightning Network or sending to an address that submarine swaps into your channel. And so here's the first problem. What happens if you send money to this submarine swap address in excess of what your channel can receive? How do they handle that? There's absolutely no indication as to how they can handle that, and I haven't had a chance to actually test that yet. So we'll see in the future on that. Second, the way that this is set up, where they open a channel to you, any money that you receive, every single penny you put on this wallet is instantly starting off in a completely vulnerable state. They can submit an old state and steal all of that money if you don't catch them. That is an unbelievably fucking retarded engineering choice on every level possible. Like Eclair, by contrast, started out with only send functionality, and that was totally safe because it could only send, and you funded the channel yourself. So your full balance started out on your side of the channel, and the only thing that could happen was you get back money that you shouldn't. So you make extra money if somebody submits an old channel state. There was a solid engineering choice. The incentives were all aligned properly. This is the exact fucking opposite of that. It is literally impossible to put any money on this wallet that could not potentially be stolen right off the bat by submitting an old channel state if you don't catch them and submit a penalty. And another thing is, there's absolutely nothing anywhere I can find that even says how long the timeout period is to penalize them. So I don't even have a fucking clue how long you have to actually try and catch them if they were to submit an old state, or if somebody compromised their server and started submitting old states. So that's just a horrible decision. And then also the entire business model of having their own money set up in channels to people, there's two downsides to that. One, it's absolutely not practical in the long term to do that, because you have to put all kinds of money up front. You don't know if this person is going to actually put to use, if they're going to send that much to their wallet. And two, it creates a hard cap. I cannot put more than 0.005 on this wallet. I can't. There's not enough channel capacity, and there's absolutely nothing I can find anywhere about how they handle overages like that. Like, can you actually get them to open another channel to you? Will they? Like, again, like if you send more money than the channel capacity to the submarine swap address, how does it handle that? I have no clue. Like this entire thing is just engineered as stupidly as possible. And they're also trying to work on integrating with Bitrefill and LN Pizza directly into the wallet for spending purposes. Kind of a real curveball there, you know, two businesses both doing something with completely bad practices, partnering with each other. Real shocker. And they're also working on a card that's supposedly designed for payment terminals, so you can pay with the card instead of using your phone directly. Let's say in a restaurant, so you don't have to hand somebody your phone. Absolutely no details on how that works, but there is already, despite only being in beta, something directly in the app to give your name, email address, your physical address to order one of these cards, despite absolutely no details on how it works or how payments are securely handled by handing somebody over a card. And yeah, I mean, like, this wallet is literally every retarded fucking thing that a Lightning wallet should not be doing. And like nobody should fucking use this. People should actively be discouraging people from using this. This is not safe, horribly bad practices. And trying to encourage this kind of model, in a way, is going to make Bcashers right in all of the shit they spew about Lightning Network devolving into trusted hub and spoke models, because that's literally exactly what this wallet is doing. So, like, frankly, fuck this wallet. Fuck the people involved in it. They're fucking morons doing everything as wrong as you can possibly fucking do.
Yeah, man. I mean, it's like hard to comment back on that because, yeah, I mean, it's a pretty harsh language, but I get what you're saying. I mean, they're taking that kind of security through technical complexity route, and that's definitely not something to be done in Bitcoin. And yeah, I mean, you know, the whole way it's advertised as far as making it a Breez, you're always getting trade-offs with that. And, you know, you want this Breez and the Breez card and all that. I imagine you'll be giving up a bunch of information, and it's just sort of antithetical to what the Lightning Network is trying to do. Yeah, it's a hard nut to crack, but I mean, I think Ellen Zapp's doing a good job as far as like creating this idea of like just an easy GUI for the user to be working with instead of trying to just like build the solutions out for them in the back end. That's gonna hurt them in the long run. But yeah, I mean, we fiddled around with it a little bit and definitely gave us some trouble. So
I just like to point out that Stratis has a wallet that's called Breez wallet, and it's been released for a very long time now. They are doing Tumblebit with it. So yeah, it might lead to some confusion.
Oh yeah, but it's just like seriously, like, Jesus fucking Christ. Like, if you're going to build something that's going to manage people's money, fucking do it right, or just fuck off. Like, seriously, since Lightning has gone live and people started building on it, I cannot think of a time since I've gotten to Bitcoin where I've seen people building more shit in as retarded as a fucking way as you possibly can. Like, stop being fucking dumbasses.
I think the Ethereum ERC20 tokens got us beat on that. Thank goodness. But yeah, like it's pretty insane. And, you know, we'll see the way these things keep getting developed. But the Lightning Network's got a lot of buzz behind it because it does allow some pretty amazing technical accomplishments for Bitcoin to be able to handle the volume and the load of everything. But it's hard. It's technical. It's a complex subject. It's not easy. You know, the programmer might not understand the security, or the security guy doesn't understand the programming. And, you know, it's hard to get people that understand all the little stack that they have to pay attention to when developing on this network.
But it's like not that at all. Like, they understand all of this. They're just making the stupidest decisions possible with a full understanding for what that means.
Well then, yeah, it doesn't sound very good.
Yeah, so I guess, Janine, do you want to take us into the next one and give us some news about the Lightning Network that isn't going to make me pissed as fuck.
Yeah. So there won't be any swear words in my section. So on April 2nd, the upcoming release of LND was, well, the static channel backup part was merged into the upcoming release, and I'm not sure, I haven't checked whether that's actually been released yet, but it was an upcoming release at the time that this was written. And so there was a really nice article on Medium by Patrick Lemke, I think how you pronounce it, published a few days ago on April 7th, which explains why static channel backups are and why they're important. So Lightning has mnemonic seeds just like regular Bitcoin keys and addresses do, but Lightning seeds are a bit different in that they currently, prior to this merge update, they did not apply to funds stored in the channel. They only applied to on-chain funds because the seed relies on a random number in channel.db. So if your channel DB file is lost or corrupted, then all of the funds in your channel would be inaccessible. So once you update to this new release and it functions properly, there will now be a directory for static backups found at lnd/chain/bitcoin/mainnet/channel.backup, which will allow you to rescue the funds in your channels in case channel DB is lost or corrupted somehow. However, as Patrick writes, this in itself doesn't completely solve the problem because the backup directory has the same chance of being lost or corrupted as channel DB. However, the Lightning or the LND developers have also allowed you to encrypt the channel backup file with your seed so that you can safely store it somewhere else. And in terms of randomness, I mean, a seed is probably a better password than 99% of people will ever generate. So in terms of whether it's a secure way to encrypt it, that sounds okay as long as you've made a backup of your seed. He then suggests using different types of auto sync options for making that backup so that you don't lose it. Obviously, there's cloud options, which is just other people's computers, which I would not use, but you can also do a local backup to a different disk somewhere. And keep in mind that at the moment when you restore from backup, your Lightning channels will be closed upon doing so. But I think that was interesting to point out, even though it's a bit old now, because a lot of people have been waiting for some kind of way to back up their channels.
Mm-hmm. And, you know, this I'm really happy to see, just because like that is one of the big issues going forward is being able to have the most robust recovery mode from data loss as possible. And I mean, ideally, like, we can hopefully in the long term there can be ways found to make things like pretty much completely deterministic in terms of literally just having to have the word seed and that's it. And though even to get to that point, I really think that it would still have to be something that would require peer cooperation to recover funds quickly, and still cover the revocation secrets so that if somebody sees that you lost your data, you can still penalize old states. But you know, it's incremental progress, and I think we'll get there at the end of the day to really have the most robust recovery model possible, so that we don't have, you know, data being corrupted, phones being lost, and things like this leading to money in channels being lost.
Yeah, man, it's good to, like you're saying, see some sort of like, you know, some more back end of these different specs being built out to save people's funds from being totally lost, because there's been a lot of reckless Satoshis being thrown out there. And yeah, I mean, like you're saying, slow incremental progress and these sort of developments, while it's not some flashy new hub spoke wallet or atomic swap exchange, this is the sort of incremental progress that's going to help the entire network. All right, so yes, was there any more comment on that?
I think that's a wrap.
All right. So, getting into this, last episode, we talked about the Ethereum Startup Incubator Consensus coming up with their own regulatory framework for listing tokens because they were tired of waiting SEC guidance. Well, now they've got it. The SEC just released a 13-page document on April 3rd titled Framework for Investment Contract Analysis of Digital Assets. While the SEC has been going after ICO organizers in the past, there are other groups that now fall under this framework like exchanges, custody services, hedge funds, marketing firms, and other professional services. The SEC said in this press statement, quote, "Market participants should be aware that they may be conducting activities that fall within our jurisdiction. The framework is not intended to be an exhaustive overview of the law, but rather an analytical tool to help market participants assess whether the federal securities laws apply to the offer, sale, or resale of a particular digital asset," close quote. The beginning of the document talks about the Howey test and how it's applied to investment contracts. Quote, "Under the Howey test, an investment contract exists when there is an investment of money in a common enterprise with a reasonable expectation of profit to be derived from the efforts of others. Whether a particular digital asset at that time of its offer or sale satisfies the Howey test depends on the specific facts and circumstances," close quote. So if money or value is invested, whether fiat or crypto, and it's all invested in a common enterprise or a central entity is offering something with a shared interest to its purchasers, and there's an expectation of profit, it's a security in the eyes of the SEC. The document says that a token is at risk of being a security if the purchasers relies on the efforts of an active participant or central entity, and there's a reasonable expectation of profit. So if a group or central entity directs the development and is responsible for the token's success, it's a security. The SEC says that most token offerings fall under this label of a security under this framework, and that just taking on the word utility or consumptive token doesn't change that fact. Now, with all that said, the SEC is still saying if a project is sufficiently decentralized and has a working product whose value is tied to its utility, it's not a security. So for right now, it looks like Ethereum has once again skirted under regulatory shade. And within this 13-page document, it's hard to see clear answers for some people in the industry. Head of Legal and Regulatory Affairs at Bitflyer USA, Haley Lennon, just recently told CoinDesk, quote, "Today's SEC framework provides additional clarity, but it does not give the industry all the answers. The other relevant considerations on page 9 and 10 illustrate that digital assets don't fit neatly into the Howey test, and there are additional factors from cases that the industry needs to consider," close quote. She's not alone in thinking this. Andrew Hinks, an attorney on the general counsel of Athena Blockchain, said, quote, "While it's helpful and it's good to see the SEC remain focused in this area, it's not quite as useful as a law or a rule or even formal guidance would be. A lot of it is a reiteration of what the law is and has been," close quote. It'll be interesting to see how things evolve going forward. Are we going to see more projects accepting this framework and doing official offerings like STOs, or are we going to see these projects thrive in areas outside of SEC jurisdiction? I don't know. I know that since Colorado instituted the Digital Token Act earlier this year, which provides a similar framework as far as like the value of the token has to be tied to its utility. Yeah, these projects have been scratching their heads trying to determine if their token actually provides that utility. But at the same time, they haven't decided to leave the area. So it looks like the industry finally got some word from the SEC, and that's better than the continuation of saying nothing. But it looks like we'll continue to see the legalities of tokens argued in the public realm in courtrooms. So did you guys catch any of the the news surrounding this token framework, or did y'all read it and check it out? You got any opinion on the matter?
I didn't really have a chance to go too in depth into it, but like I think this like decentralized enough nonsense is just like complete horseshit. Like something is not decentralized if the token is literally printed out of thin air by somebody who takes money in exchange for the token they printed out of thin air. Like a decentralized system is something that you drop software out there for that has not pushed tokens into circulation that has some kind of decentralized mechanism for putting those tokens into circulation. Like raising money and giving it out based on how much money people gave you is not decentralized. Like the logic behind trying to paint any project out there that does something like that as decentralized is absurd.
Yeah, honestly, I think that's where the whole idea of like applying the how I test framework to these digital assets like falls flat on its face. Like if you're not going to hold Ethereum accountable for their token sale and everything, then I don't understand how you're supposed to apply this broadly to all these assets. And yeah, I mean, I don't know. I mean, I guess it's going to serve a purpose as far as people in the US deciding like, okay, well, you can't just go full out scam. That seems to be the thing that I saw the most sort of backpedaling on whenever the Colorado instituted the Digital Token Act. It was just like, okay, well, you can't just issue these things without at least having a roadmap and a utility and some sort of development towards the, like you're trying to build out something that's going to improve a technological space in some sector. But yeah, I don't know. We'll have to see how it evolves. Like I said, I mean, it's a framework, but it's not different from the old legislation as far as just like a Howey test and trying to put it on digital assets, but yet they don't want to hold Ethereum accountable because they've got a lot of big lobbying arm and a lot of this. Yeah, I mean, that's really interesting to me that they are not going to hold them accountable now that the network is kind of fracturing and we're seeing more of these forks of Ethereum more dependent on smaller central entities. So, yeah, I don't know. For right now, it does seem pretty confusing if you're just trying to build out some sort of tokenized system within the cryptocurrency space and whether or not you're actually within compliance. It's hard to say for sure you are because they're still being pretty vague about it, saying stuff like sufficiently decentralized.
Mm-hmm.
All right.
So no para, Janine, you guys got any 2 cents on this one?
Yeah, just very quickly, I will have a story later on the Federal Reserve, and it turns out the creation of the Federal Reserve was because of people like you guys who are crying for regulations so the time, because there is a mess of the currencies everywhere.
Wait,
So,
I am not crying for regulation. Who's crying for regulation?
well, not you, that's for sure.
I'm going to say no to calling for regulation, and I'm also going to say no to why the Fed was created, but we can argue about that when you cover that one.
Come on, Shinobu, you gotta get the tone right. It's no.
Oh, no. All right, though, Janine, you want to take us into the next one?
Let's see. I will have to find the next one. It's the price spike. So in previous shows, we've already talked about why there was a big price spike around the beginning of April. And there are various theories about why that happened, most of which center around the activities of futures markets. There's even an article under another story that I will cover, it would actually make more sense in this section, but that has to do with someone possibly taking advantage of algorithmic trading between various hedge funds. And the CME obviously tracks daily exchange volume. And if you look at their chart, there is a very noticeable and consistent increase over the past 10 days in terms of exchange volume. Prior to April, it was mostly oscillating between 2,000 and 5,000 shares. That's correct. But on April 2nd, it went up to 12,000 and then peaked at 22,500 on April 4th. And then in the last few days, it's gone between 9,000 and 16,000. So that's just a point that I think it was a Bitcoinist article And then I went and checked the chart. So yeah, that might be a thing.
Now, the cause and effect there is, I don't
Yeah.
know, it's something that's debatable, but I do think that it's definitely worth noting, though, how the volume spiked in tandem with that price spike on CME. Like, it shows that institutional interest grew enormously the moment the price started spiking upwards.
Yeah, so I mean, it's hard to tell whether this activity started before I haven't checked like exactly minute to minute whether this all started before the price spiked, or if the price spiked and then that drew interest and then the volume on exchanges went up. But yeah, so there's been a major spike, so that's interesting.
Yeah, I mean, the price talk has been kind of crazy over the past few days. And I mean, yeah, really, since like we started to make that upturn from 32 to 4, everybody's kind of been hyped up. And now that we went above 5, yeah, I mean, it's kind of natural. I think that people are going to jump back into these markets where they can trade on the futures. I mean, it's like there hasn't been that many people there because you're basically playing with these small amounts of guys that are just watching the dailies or something and just playing around, to where you start getting these big moves. And now there's access to something like the CME, Bitcoin futures. I mean, yeah, we're going to see a bunch of people jump in there. That's where, yeah, this next run up might be a little crazy. I mean, we're going to see. But I mean, I remember in 2017, it was always just like getting access to the platform and access to liquidity. And, those sort of access is like there's more access points at this time. So we'll see, some more people flood in when price action happens. All right, so you guys want to speculate a little bit on this, where this price action is coming from? So, all right, what are you going to say, Shinobi? Where do you think?
Markets.
All right, well, let's talk about one particular market maybe that had an effect on it. It's been a while since we checked in on China, but mainly that's because Beijing and the People's Bank of China has been relatively quiet since there are heavy enforcements against the industry. Now we have a couple of articles out that may be opening the lid a little bit on what's going on. According to Bitcoinist, it looks like earners over there across the Pacific Pond have found their way back into Bitcoin, this time paying a Tether premium. They report on CN Ledger's tweets that say, quote, Chinese markets reveal strong buys, over-the-counter trades. The almost only way to buy Bitcoin with fiat in China, showing considerable dollar premium. 1 USDT equals 7 Chinese yen, over the official rate of 1 USD equals 6.7 Chinese yen, close quote. All of this demand has recently risen Tether above its dollar peg and brought their market cap up to some $2.2 billion. That stands leagues ahead of the rest of the stablecoin game. CoinLib.io has shown over $74.2 million in Chinese yen has flown into Bitcoin over a 24-hour period on the date of April the 7th. CN Ledger goes on to say, quote, after the People's Bank of China's ICO exchange ban, the most convenient way to buy cryptos in China is to buy stablecoins like USDT first using over-the-counter and then trade into any cryptos you want, close quote. And then Bitcoin speculates that this is due to profits from the red-hot stock market over there in China. So it sounds like the ban on Bitcoin hasn't put too much of a damper on things, or has it? So Reuters reports that China state planners are working to eliminate Bitcoin mining from the country. As we know, that's not really news, but there has been a recent development to reiterate that point. The National Development and Reform Commission, the NDRC, is responsible for listing industries in China that they should either encourage, restrict, or eliminate. On this most recent draft list, the NDRC has suggested that cryptocurrency mining be phased out. The reasoning sounds familiar. It doesn't adhere to any relevant laws or regulations, is unsafe, wastes natural resources, and pollutes the environment. The public has up until May 7th to comment on the draft, but the NDRC wants quick action. Since there is no target date included in the document, this means it should be phased out immediately. Jihan Chu, managing partner at blockchain investments from firm Kinetics, said, quote, the NDRC's move is in line overall with China's desire to control different layers of the rapidly growing crypto industry and does not yet signal a major shift in policy. He goes on to say, I believe China simply wants to reboot the crypto industry into one they have oversight on, the same approach they took with the internet, close quote. The industry over there has been under heavy restrictions since the actual ban back in 2017. Now it looks like those who are in the know have no qualms about investing in Bitcoin. And from recent reports regarding renewed Chinese mining contracts, it sounds like this is FUD. But there could be something to it. I called it FUD back in that ban of 2017, and we saw how that turned out. Any time the price starts moving, you can be sure we're going to see a Tether story and a China ban story. So, I mean, maybe this whole price spike and rise, like I've seen some speculation that it came from one investor, but I mean, like maybe it's from a lot of people making money on the Chinese stock market and they're trying to find a way to get their money out of China. What do you guys think about that? Is that a possibility, or you think it was just one large market buy?
Yeah, I think like the natural demand driver in China at this point is going to be wealthy people trying to pull off capital flight. I mean, it's really given the nature of most markets drying up besides OTC and just the overall atmosphere over there. It's really the only large scale rational use at this point, I think. Like it's China has digitized payment systems. Like it's not, Bitcoin isn't really something that's going to be seeing wide demand for that use over there. Its best use is this is how you get large amounts of capital out of the country or beyond the reach of the Communist Party.
Yeah, I mean, like that's where the Bitcoin ban thing. It's the whole mining thing. I mean, that's where I think this whole NDRC draft list is just like another round of Bitcoin ban FUD, because I think we've seen more in the way of like actual money moving around to build out these farms, these a new group of farms and mining farms with this the rainy season over there, and everything's melting, the snow melts all coming down, and Yellow Sea's floating up, and so now they got all this excess energy. I mean, I don't see how exactly they're going to put out a bigger ban than they put out in 2017 that's going to make people, I don't know, crack in line or something. It seems like it's not really having, I mean, it's having an effect, but for sure there's definitely the industry still there. I mean, it's just different market participants at this point. And yeah, I mean, I don't know, that price spike, I'm sure it had something to do with some buyers in different areas. I'm sure, maybe these guys were just like running with the run up, but they saw this price spike and that's when they all started investing. It's hard to say always what is the chicken and egg situation with these price spikes.
I just blame memes. It's always memes.
All right. So where are we going from here, man? Looks like we got some news about active Bitcoin wallets.
Yeah, this is a bit of a weird story. So Bloomberg published an article, I think a week ago now, about recent activity on the Bitcoin network based on market analysis by a group called Flipside Crypto. And they say that April was apparently not only a momentous occasion in terms of the futures market and exchange volume, but they say that the number of, quote, active Bitcoin wallets has gone up since the middle of March. They say, well, 40% to 50% of all Bitcoins are usually sitting in wallets that have been inactive from 1 to 6 months. The average has been about 10% since March 15th. David Boltz, who is the CEO of Flipside Crypto, noted that most often the price moves are the result of a few whales, as large holders are often called shifting positions. Well, actually, that was a quote from someone else. Anyway, that was... He was quoted in there. And so that was the case last fall. Then when Bitcoin plunged 40%, this time around the move was much more broad-based with smaller wallets waking up. It's not really, the reason it's weird is because it's not really clear to me how they measured this. They don't exactly define or explain what they mean by active wallet versus inactive wallet, or how they even know how many wallets there are. And they're kind of mixing terms because the chart in the Bloomberg article actually looks at the number of activated Bitcoins, which is not the same as number of wallets, although it's possible that this data, they basically renamed Bitcoin days destroyed. That's really the only explanation I could think of, but I would have to check whether that actually matches other measurements of Bitcoin days destroyed. It's just a weird language, so not really clear how they came to these numbers. If anyone doesn't know, Bitcoin days destroyed is when you multiply the number of coins in a transaction by how long it has been since they last moved. And that just gives you a kind of, idea of how much of the market is moving and, patterns and stuff like that. In terms of like, it's a bigger deal if coins that haven't moved for like several years are moving for the first time in a few years than if, a coin that moved yesterday moves again. So if you then look at the number of active addresses, which is slightly better than wallets, because it's not really clear which addresses are in which wallets, there doesn't seem to be that big of a jump in terms of activity, although it has been increasing. Throughout March, it was mostly bouncing around 600,000 active addresses on a daily basis, and it nearly touched 800,000 on April 5th. And it's probably been averaging somewhere around 700,000 active addresses daily within the last week or two, but not the sudden jump that we saw, or the sudden jump that they claim in terms of active wallets. Now, obviously, both of the statistics could be, they're not really in conflict, but I would just be more curious to know what data they use for that and whether they're actually just measuring Bitcoin days destroyed, which is the term that we actually use for Bitcoin moving. We don't talk about wallets really because that's not easy to measure. But hint, one takeaway from this story is that anyone who wants to or needs a low fee day to start sending some like 1 Satoshi per byte ones and not having to bump it up, your best bet to send transactions is Sunday, if you didn't know, because when you look at charts with active addresses, that's also kind of correlated to, people actually sending transactions on those days. And so the number of active addresses consistently drops on Sunday. That's usually the lowest point of the week. So that's 2 interesting indicators. So yeah, send transactions on Sunday if you can to save money.
Stop trying to be impartial and balanced, okay? Coins are moving. The price is going to go to the fucking moon. This is what this means, okay? This is how we're going to interpret these symbols. Price, moon.
Yeah. Sunday run day, run your dust all into one wallet. I mean, yeah, like that, that's definitely a useful practice, is to try and get it where the fees are low. And I mean, yeah, naturally with all this stuff, with the price moving, you get people moving their stuff. I mean, just not even a week ago, I was at a meetup and, had a newcomer show up. He's been around for a couple meetups now. And he's talking about, how can I, peel out this Glacier, wallet I've had stuck around. I need some help with that, because he's like saying, he wants to be in the right position for when the market does make a move. And yeah, I imagine that's what this is. A lot of people just getting in the right position. So whenever their price does hit where they want to cash out a little, I guess they're just going ahead and getting all that stuff in order.
Mm-hmm. Alrighty, so ready to slide along?
Yeah, man, that's a lot of price volume talk. Where are we going from here?
Alrighty, so Electrum has been having a lot of issues lately. A while back we had that issue where the messaging system from the servers was being abused to trick people into downloading malware infested wallets to steal their coins. Well, since Electrum has pushed out an update for that, there has been a huge DDoS ongoing the past couple days of up-to-date Electrum servers, which would effectively issue a final warning to old software to update to the official version to deal with these malicious download links being sent by servers. And they are being swarmed right now by several thousand devices in a botnet using custom code to connect to the Electrum servers and waste their resources. And they're effectively being hit with like up to like 23 gigabytes was one of the figures of data I've seen regularly by this botnet. And a lot of the developers effectively think right now that the logic behind this is attempting to knock the up-to-date servers offline so that people with vulnerable wallets still will shuffle around to these malicious Electrum servers that try to trick them into downloading malware instead of the official Electrum version. But right now they've issued a patch for Electrum X to introduce resource limits per IP address to try to kind of limit the damage that the botnet can do. And if you check the Reddit thread in the comments, they've actually pointed to a few servers that seem to be doing okay since the patch in terms of uptime. But really, this, I think, ultimately goes beyond just the issue of this scammer attempting to continue driving people towards this specific exploit. And it really comes down to really any kind of wallet or software in this ecosystem that depends on a central point or server to function properly. And at the end of the day, any type of software that's architected that way is vulnerable to this kind of attack. And that's, it's really not something that you can deal with in an absolute way, except ultimately at the end of the day, running your own node. Like the more people who run their own node to not be dependent on centralized servers like this, the more infeasible it is to pull DDoS attacks like this that will really affect a significant amount of people. And I mean, like they're doing with the Electrum server here, they're patching it for resource limits to deal with this specific instance, but it's still ultimately not removing that central point that can be attacked. And unless you actually go through the steps to run your own node, I'm willing to bet that the software you're using is, subject to these kind of attacks. And the bigger things get in this space, the more use we see, the more attention we get. I think the more common attacks on these kinds of centralized, infrastructure servers that users require to actually use Bitcoin, they're going to pick up. They're going to get more common. And yeah.
On the other hand, you're not seeing Google getting DDoS attacked every time. But anyway, the scary part is that this is what Electrum has go for. Electrum is a decentralized system, right? The developers are not running their own server. So, I mean, it just mind bugging that they succeeded. Did they succeed? They succeed to DDoS attack a decentralized system. I don't know. It's really scary, On the other hand, they had a lot of financial incentive, right? Because they got millions from the previous phishing attacks. So I guess they just wanna continue that. So I'm not. So they have a lot of financial they have a lot of resources. They have a lot of bitcoins that they can buy up all the darknet bot attack services on the darknet. So yeah.
Well, I mean, it's Electrum's infrastructure is decentralized, but it's not very decentralized. I mean, there's only like 100 something, or like maybe a few hundred Electrum servers in the world. And I mean, like Belker was saying during that special edition, a lot of those are probably just malicious for spying purposes. Like there's not, while there isn't a single central Electrum server, I mean, there's not really many of them. And so Like even though you can say it's decentralized, it's nowhere near as decentralized as the Bitcoin network itself. So it still does present like a feasible target for attacks like this. There's not really that many, servers out there that you have to hit to really have a negative effect for a lot of Electrum users.
So goes the argument for just security in general. It's like, as value raises in Bitcoin, these attacks aren't going to go down. I mean, like, this is just, this is the theater of security. As like value goes up and people have more interest to take something out, and there's a method to try and do it, we'll see it being leveraged. So yeah, I mean, it's a problem. It's something that Electrum personal servers, I mean, there's a lot of people trying to build out this trusted node system and hardware. So, yeah, I mean, we'll have to see how it goes, because, I mean, it's hard to say how they could actually solve this problem. I mean, I guess you could say, yeah, they could hire a bunch of different servers or something to try and make sure that they're always up and running, but that would create some sort of centralized entity to do that. So it's hard to say.
All right. Shall we go to the next one?
Go, 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 go. Red team, go.
Yeah, man, take us there.
Okay, let's talk about developers. So actually just a couple of hours ago, the large developer survey came out from Stackoverflow. For those who don't know what Stackoverflow is, it's the place where every developer is going to find answers to their questions. So the survey had some interesting stuff, and actually it had Bitcoin stuff in it, or more like blockchain stuff on it. But anyway, some takeaways. 60% of the respondents had coding experience over 5 years, and 80% of the respondents learned to code over the 5 years ago. Yes. So 12% contributes to open source for a month or more often. This is interesting because it means only 12% of the existing developers in the world contributes to open source, which is very low. Anyway, what I really liked is that .NET Core is the most loved framework. 77% of
Bullshit.
.NET Core developers loves .NET Core. The other thing is that Visual Studio Code 50% and Visual Studio 31% are the most popular developers environment. So props to Microsoft for that.
Use Emacs fact.
Okay, and let's talk about operating systems. What do you think? What operating systems developers use? Shinobi.
Windows sucks. Monkey.
As much as it sucks, I bet they use Windows.
Yes, 47% use Windows, 26% use Mac OS, and 25%, a small minority of 25% use some.
That's a whole quarter, bitch.
Yeah, so they are Linux users. So, Shinobi, if you want to be a developer, you should change to Windows. Because
Nope.
People are more productive on that platform.
Nope. I will stick to Emacs. I will stick to Linux. Fuck you very much.
How can you say that Linux is a minority when it's only 1% less than Mac users?
Oh, I was just messing with Shinobi. Okay, so and now comes the blockchain stuff, which actually is going to take us out of our bubble. What do people think about blockchain? What do the developers think about blockchain and Bitcoin? This is really interesting. So first question was that how are your organization is using blockchain technology? 80%, not at all. 12.7% of the all organizations are using blockchain for non-currency applications. Okay.
Excuse me, they're using a database with versioning.
Yeah, I'm disappointed that 20% of them would claim that they're using blockchain, because they're probably not.
4% are implementing cryptocurrency-based products. 2.1% accepting Bitcoin or other coins and tokens as payments. And 1.3% implementing its own cryptocurrency. So their conclusion was based on this question that most respondents on our survey say their organizations are not using or implementing blockchain technology, and the most common use reported is outside of currency. Developers in India are the most likely to say their organizations are using blockchain technology. So yeah, Bitcoin is not very used.
Yeah. That's not a shocker there. The biggest use for Bitcoin is price speculation and long-term investments. I mean, it's not really a shocker there.
Okay, the next question is more about opinions. What are the opinions of developers on blockchain technology? 29% finds it useful across many domains and could change many aspects of our lives. 26% useful for immutable record keeping outside of currency. 16% thinks it's a passing fad. FOD. Don't know how to pronounce it. You know what I mean. 15% an irresponsible use of resources. 12% useful for decentralized currency, such as Bitcoin. So, yeah.
Wait, more people thought that blockchains were useful for things other than currency than people who thought it was useful for currency? What?
Yes.
That's really stupid.
It's not too surprising though, right? I mean, it is like kind of a little bit of like what we're seeing with the whole blockchain madness, and people are really latching on to this idea of like immutable medical records or, you know, censorship resistant content creation. And it's like these ideas, it's like those things are the ones that are spread out. I mean, it is kind of surprising to me to hear like, you know, yeah, just like less than 2% of developers are actually taking payments in Bitcoin, and, you know, 1.3% are actually doing their own project. I thought it would have been more than that, but I guess it's not. That's like I'm saying, it's not too surprising. I mean, like, we know that this space is small and that the bigger portion of it is still this dumb money running around trying to figure out what exactly Bitcoin is trying to do. But yeah, I don't know.
So their conclusion, and I'm finishing the story here, their conclusion was based on the second question on the opinions of blockchain technology. When asked what the primary belief about blockchain technology, respondents on our survey are largely optimistic about its broad usefulness. This optimism is largely concentrated among young, less experienced developers, however. The more experienced respondent is, the more likely they are say blockchain technology is an irresponsible use of resources. And
yeah, that's right, OGs. You tell these little idiots.
So, but you know, it's also good for us because if you are building a product, then your product is not going to be successful if everyone thinks it's a great thing. You are going to be successful if you go against the market and you are right and the market is wrong, right? That's how you be successful. So yeah, there is that. Okay, any comments or go to the next story?
So I have an umbrella, and even though the most successful application of that umbrella has been to not let water hit me when it's raining, I think that the more successful application will be to prevent fires.
Yes, exactly. If you are right.
That's a good one.
Yeah, I think I got my little jabs in as you went, no para. So I guess if nobody else has anything, you want to take us into the next one, Ginny?
Yeah, so some of you may have seen on Twitter, there was a tweet from Stefan Pally, lawyer, who does like blockchain and token stuff and analysis, that Peter Todd had filed a civil lawsuit for defamation against Isis Lovecraft, formerly of the Thor project. Peter confirmed that he had filed this lawsuit on April 5th, as in he filed it on April 3rd, but he confirmed that he had filed it on Twitter on April 5th, and said that he would not be making any comments on it except to say, I hope Isis Lovecraft does the right thing here, and I hope the wider community acts in the spirit of forgiveness and healing as I will. In the last couple of days after this tweet, I noticed that there were some people who were accusing him of misgendering and dead naming because the lawsuit addresses Lovecraft as she and uses both the legal name and the pseudonym. So I'm going to clear that up really quick. On the misgendering point, he added to his thread that because he knew Isis when they went by she and her, that was why he was using she and her in his tweets, as he has in the past, and it's never been an issue. And so he said, I've asked my lawyers to use they, them in the future, and I'll do the same. Obviously, because the lawsuit points out that he's been blocked on Twitter, so he probably wasn't even aware that that was the case. On the dead naming point, for anyone who doesn't know, dead naming is a term for when someone uses the birth name of a person instead of the name that they currently identify with. And I've only ever heard this term used in reference to people who are transgender. For example, someone who is born with the legal name Susan, then transitions to go by the name Sam. But dead naming is actually not exclusive to transgender people. It just refers to using the dead name or a name that isn't used anymore of a person. And this accusation doesn't make that much sense to me, because if you look at his tweets, Peter's tweets, he uses Lovecraft's legal name not within his personal capacity, but just within the lawsuit, which is required in a legal sense. I'll get into that a bit later, but it also doesn't make sense. Well, no, I'll get to now. So if you file a lawsuit against someone, you are usually required to use the legal name of someone who is either the plaintiff or the defendant. So both parties have to use their legal names. And not only do you need to use the legal name, but you need to make sure that you spell it correctly, because if you spell it incorrectly or you use the wrong name, in a lot of jurisdictions, you would either be required to refile the lawsuit, or you risk invalidating the result of the suit if you continue with the mistake in your legal documentation. So it's a big deal to name people correctly using legal names. And whether that differs from the name that people go by in their day-to-day activities, even if they never use their legal name, that's what you're required to do when you file a lawsuit if you use the legal system. Now, is it a great thing that in order to resolve a dispute with someone that you must expose personal information about them? No, that really sucks, but those are the rules in the US legal system. And the California court website even has a page that provides instructions on how to name defendants. So this was not something that was intentional. It's just he had to do this in order to follow the rules of how to file a lawsuit. In this case, it's a civil suit. So yeah, I don't get any of the accusations, and he's clarified them as best as he is able within the situation. So the gist of the lawsuit is that Peter and Isis were acquaintances since 2014, but in 2016 they had a falling out in relation to the allegations against Jacob Appelbaum, and this is where I think a lot of people who are commenting on this case are mostly unaware of the extent of the backstory involved. And I have an investigation on GitHub that I've been updating almost monthly ever since those allegations came out in June 2016. And it's a very long investigation. It'll probably take you an entire day to read the whole thing. But I include source links for almost every single sentence in there. So if you aren't aware of that history, you probably should be before you say anything. That might sound really stupid. And so I hope it will bring clarity if you're not aware of that history related to that other case. I hope it brings clarity, and maybe it'll bring clarity to this issue as well, as much as there can be in a case where one case is almost 3 years old and still unresolved, and the other one has barely started. So I'll just read a modified section of the summary that I wrote about this lawsuit in the investigation, because now they're overlapping a bit. So basically, in a few tweets, Lovecraft had accused Todd of being a, quote, abuser, specifically of rape and assault. And the lawsuit states that, as I said, they were acquaintances since 2014. And there are a number of, this wasn't included in the lawsuit, but when I looked, I found a number of examples of positive interactions on Twitter and no negative interactions that I can tell. So this is a very recent thing within the last year or two. And including, there was even a joint conversation with Appelbaum. And so it's all very positive, which will be interesting how that gets interpreted in the case. And early on, when the allegations against Appelbaum came out, Peter Todd was actually praising Lovecraft and other people for publishing their allegations and sharing their stories. He particularly used the word brave, beautiful, and admirable when he was talking about it. And Lovecraft even liked those tweets. But then the lawsuit notes that Lovecraft blocked Todd from viewing the Twitter profile after he had said that he didn't know what was true regarding the controversy as a whole, likely referring to a particular tweet that I found from August 18th, 2016, where he was talking to Zaki. And so Todd subsequently noted discrepancies in the public versus private messages from Lovecraft relating to whether they were in Berlin or not during a particular period of time that was influential to the case. And so he offered to Lovecraft, I don't know if this was after or before he made these statements, but he had offered to collect evidence to help out. And that was apparently not accepted, and they even stopped talking. Then in May 2017, he tweeted that he had decided to stay away from Lovecraft and one of their partners because of a dispute that was going on with some professors at the University of Eindhoven related to that whole controversy. And so Lovecraft also blocked him on GitHub sometime around May 2017. So yeah, all of the negative interactions seem to have come up at a particular point where it seems like they're related to the other controversy. So it's unclear, obviously none of this case has been played out, so we don't know what the counter arguments are. But the lawsuit states that Todd has been harmed by the defendant's statements, including shame, embarrassment, hurt feelings, anxiety, mortification, embarrassment, and loss of reputation among his friends, peers, or professional community. Additionally, and on information and belief, Todd has lost business and professional opportunities, including conference speakerships, because of the defendant's statements. So according to the Pacer database where the lawsuit information is available, the initial case management conference will take place on July 3rd in Oakland, California. So we probably won't hear any more information about this case for another couple of months. But in summary, I just wanted to bring up this story on the show, not because I think we need to go into extensive commentary, but I have a feeling that this story if it gets more attention, particularly from certain people, especially on Twitter, who have already shown themselves to be very immature in commenting on the internet, there may have been there may be a lot of misinformation coming out and misinterpretation. And so I wanted to take this opportunity to point people to a resource that hopefully prevents that from happening to some extent.
I don't think you succeeded, because I was trying to closely follow what you're saying, but I still have the question. I still don't understand who's suing who for why.
So Peter Todd is suing Isis Lovecraft for making tweets accusing him of being a rapist or a sexual abuser.
But is he a Chad?
Yeah,
No.
this whole thing is just like, it's ridiculous and definitely intertwines a lot with the Jacob Applebaum stuff. I mean, like, to pull a small bit of information from Janine's investigation, which, like she said, is pretty thorough. I'm not going to say whether or not Jacob actually did what he's accused of or not. I am not in any position to do so, but one of the people involved in the whole situation claimed effectively that ISIS was effectively plotting specifically to ruin Jacob's life, and was caught supposedly fabricating completely one of the multiple accusations against him, as well as specifically asking about the consequences of libel in Germany, in planning to pretend to be the accuser for an accusation she was not actually personally involved with. And this person literally told ISIS that she was afraid of her after seeing this. And just the general attitude she took in pretty much against anybody who did not blindly accept as true all of the accusations against Applebaum. I mean, to me personally, this situation with Peter just looks like an attempt to effectively lash out and slander him because he did not just blindly accept all the accusations against Applebaum as true. And I mean, they very well might be, but that entire situation was effectively just claims and counterclaims with no actual evidence and no legal process whatsoever. It was effectively all just in the court of public opinion. And so, like, personally, I hope this is resolved for Peter's sake. I don't personally believe he would do anything like that. And I think it's pretty fucked up that you can effectively damage somebody's professional reputation and financial income just by making claims without any kind of actual supporting evidence to them.
Yeah, and honestly, it's just like, it's something I can't comment on too much just because I don't really know that well all the parties involved, but I do remember a lot of that going on with Jacob Applebaum. And at the time, it wasn't just regulated to Tor and, network privacy and security. I mean, that was a big growing trend within just the mainstream. A lot of just false accusations. And I mean, it's something to push back on. I mean, it's something that is used to silence people. And, it's not always just regulated to, this idea of sexual abuse. It's also regulated, people push against, like, oh, well, it's racism, you're a racist or something. It's like these words, everybody kind of defines them. Like, we have pretty good definitions for these things, but, everybody's got their, give and take of what they're able to deal with. And, that's all something that we deal with for free speech, to where we could actually have platform like the internet to talk on. And I mean, you got somebody going around, pushing defamation against a bunch of people in a sector. I mean, somebody's got to push back on that. And that's where, I think this might be a good move there for Peter to, actually have some pushback on someone like this, who's just sort of throwing a bunch of accusations everywhere without much evidence. So, like I said, I can't comment on it too much, but I mean, just as far as like the general trend of things, it's been a disturbing trend, and it's something that I think rightfully we're seeing pushback on from certain, different levels, because I mean, it's damaged a lot where people can't talk about a lot of things just because of the fact that there's like some sort of, you're going to be labeled as something. And so it just really hurts the discussion, the overall discussion of the way everybody's moving forward. It's just a way to try and pin it down to where we can't move forward. So it's good to see that trend shut down. All right. So if there's not any more, we can go right into this little story of changing settings here. So Puerto Rico is trying to get all their cards in order to serve the cryptocurrency industry. The bottom layer of that is a bank that is licensed to handle the on-off boarding of all the fiat involved. Well, now they might have that part handled. The San Juan Mercantile Bank and Trust International, SJMBT, is a new bank in the area that recently announced, quote, SJMBT offers fiat and digital asset custody and settlement services, and it is expected to be integrated with the trading platform offered by its affiliate, the San Juan Mercantile Exchange, close quote. They've already taken on their first customers after they received a license to operate last month from Puerto Rico's Office of the Commission of Financial Institutions, the OCIF. While they are handling all the balances, they are not handling the custody of digital assets. From their press release, quote, deposits of fiat currency are held by SJMBT on behalf of its clients with its regulated correspondent banks, and digital assets are held by approved digital asset custodians. And that's close quote. And they've partnered with multiple approved custodians to reduce cost and help security. This doesn't really sound like the best setup, and to be honest, I think it's not good for security. We've seen all sorts of problems from different custodians who said they were operating best-in-class engineering. We'll see, but for now, it's good to see Puerto Rico make a move in a direction to help support the cryptocurrency industry. I mean, Puerto Rico has been in a bad spot from the looming debt crisis they face and the powerful hurricane, I think it was Maria recently, went through there, knocking out vital infrastructure. And crypto holders and gold bugs have been flocking to the area to escape tax liabilities in the U.S. Let's hope that if they have an incentive to help build out the infrastructure there, Puerto Rico won't be in such a bad spot. So as much as this setup might not be the full reserve digital asset bank of Wyoming, it's at least a step in a direction that will help the little island community stand up for themselves. Do you guys think this will help business and improve infrastructure, or is this just the wrong way to go about it?
I mean, I could see this being very valuable depending on the custodians they use for actually custodying crypto. And I think it's very interesting that the person leading this is a former executive from Noble Bank, which I've said multiple times. I think effectively got railroaded by banks in New York for keeping full reserves for Tether. And so it seems pretty interesting. Like because just to summarize, like I think that pretty much their custody bank in New York cut them off because of their involvement with Tether, and ultimately led to Noble Bank having to sell themselves off. And looking at the tight integration here with crypto services, I think this is them trying to kind of bounce back and reestablish a business that can interact with the crypto space without so much of an opportunity for them to kind of be just fucked up by the long tendrils of the government who don't like what they're doing.
Yeah, I mean, that's a really good point. I mean, that was something I was thinking about as I was reading the story was, that whole Noble Bank situation. I mean, but that was like right after Tether had moved from Wells Fargo or somewhere over there in Southeast Asia, and then they came over to Puerto Rico, and then they got shut down, and then they had to go on. And it's just like, yeah, maybe if they had a little bit more of this robust legal framework to sort of say that this is all building out to help the infrastructure of the island and to try and help, bring more people, like we're saying. I mean, a lot of people started moving over there because they can escape some tax liabilities. So maybe they could actually serve that customer base since they're living there, or they've got properties there, or however the situation is. It's like they're kind of stuck in a spot where they're, a lot of people are trying to find their economic value again in this new market. And, Puerto Rico has kind of been pushed aside from the United States for a long time, and they are on their own, even though they're a state. All the states are pretty much on their own now. And yeah, Puerto Rico's out there near the Bahamas and all these Virgin Islands and everything. So I imagine they would be, trying to cater that crowd. It'd be good to see, a bank open up in that area that can help out the industry.
Mm-hmm. All right. So any bits, any pennies, any satoshis to toss in on this? Do you need no para?
All right, let's keep going. We got a few more stories to get through. We're going to run a little bit over 2 today, but that's all right.
All right, so just really a quick announcement. As Conbase spirals further and further into shitcoinlandia, they are now listing EOS, Augur, and Maker on Coinbase Pro, with USD, Euro, and BTC pairs for EOS and Augur, and a BTC and USDC pair for Maker. And it's pretty much going to be the same policy with normal rollouts. They're going to allow people to transfer accounts in, build up liquidity in the order book, and not actually engage in trading until liquidity builds up before finally transitioning to allowing all order types. But, this is really, at this point, I think they are just absolutely flailing for any kind of revenue with a huge revenue drop over the last year or so, and they're just trying to appeal to every shitcoiner out there. Like they're the last to the ball as far as like this massive shitcoin trading mania. And honestly, like I really don't think this is going to work out for them. Like all of these people that deal with shit like this, they're already trading on Bitfinex or Bittrex or Binance. Like I really don't think this is a viable move for them to pull any kind of meaningful liquidity away from those places. So it's end short update, and have fun when you're fucked, Conbase.
Yeah, I mean, Conbase just continuing to con. I mean, now that they've got everybody over there that they think is set up the way that they do things and they're all right, I guess they're just going to try and sell them as many shit coins as they can. That's their good con they got going.
So let's go to the century of enslavement.
Yeah, let's go to the ultimate con. Let's tell us that story.
Yeah, this thing surfaced on Reddit today, and I wasn't really looking into economical stuff during the past few years, so I thought I need some refreshment of really what's going on in the world regarding money supply. This was a video. This was a 1 hour and a half long YouTube video, Century of Enslavement, the history of Federal Reserve. So it was kind of manipulative, anti-Fed propaganda, but still it was full of facts and interesting stuff. The other minus is that it was starring Roger Ver briefly at the end, which is just bad. It's a bad thing to do. All right. A couple of notes, or rather quotes, before I go into it. By the end of this tour, you will be able to explain the Federal Reserve in plain English to others. So I hope I will be able to explain you guys, because this is what they promised me. There is no other agency of government that can overrule the actions that we take, Greenspan. So the Federal Reserve is completely independent, not the government cannot overrule what they are doing. We have not owned gold since 1934. This was some random Fed guy, probably the CEO of Fed or whatever title they have, which I found interesting. And then they went into how the creation of private central bank happened. And it all started in 1694 when a privately controlled bank called the Bank of England was created because England needed money for the war against France. And then this template happened all over the world, country by country. So in most countries in the world, the bank of insert country here is actually an independent banking cartel controlled thingy, and it's not the government who is printing the money, but a completely independent bank, right? Even if they are called Bank of England, they have nothing to do with England. So it's kind of alarming there. Then it went ahead and showed some things about the Fed that they were trying to create. They were creating these kind of private central banks in the US, but they always failed, except the Fed, what you guys still have today. But kind of we have it too, because the US dollar is the reserve currency of the world. So makes no difference if you are not from the US. The problem was in 1907, at one time, there were 30,000 different currencies in circulation. Sounds familiar? People were afraid the bank issued money they use will go out of business. And then, of course, everyone got madgaxed all the time. So mass withdrawals happened, and exit scams, and unemployment and crisis. So they had to find a solution to this situation, right? Like you guys are looking for solutions for the ICO situation. So in 1913, Federal Reserve Act been passed into action. President Wilson signed away the control over the American money supply to a banking cartel, and it's not an overstatement. It's really what happened. And what they noted there is that actually the banking cartel, when they drafted the bill, they didn't actually hope for that they are going to sign away the money supply for them. But I mean, they started negotiating with that, and they just got extremely lucky, and they got the control over the money supply. So that's an interesting thing there. Another interesting thing is what I took away from this is that most money is created by banks giving loans that they can't afford. And this is how crisis happens, when banks give out too many loans, and then people try to withdraw, but they can't. And then banks go to the government. Hey, government, we fucked up. Give us some money, or there will be even larger crisis than what you are experiencing now. And then the government, oh, but we don't have money either. I mean, banks, can you lend us some money so I can give it to you. So it becomes a circular process. So banks fuck up, government lends money to them, what they got from the banks, and now this is what the century of enslavement is, what we are living in today. And this is why Bitcoin is so important, that no one can inflate it. The end.
Yeah, I mean, like that Federal Reserve, like it was an early on attack, kind of like the similar way, people just formulate their names closely to parts of the system that they want to co-opt, like consensus or, I mean, just we talked about Boltz, and Boltz is like a spec and lightning. And I mean, it just happens everywhere. Like, everything's kind of named after something, and it garners a certain level of interest and I guess a little bit of respect with just like knowing what you're talking about. And the Fed did that a long time ago, and people bought into it. And I mean, it's hard to say, like, I mean, I guess like you're trying to compare how like there was 30,000 currencies back then, and it was like this big, like, hey, we need some way to make sure that we're dealing in the right thing. And that created the Fed, which said like the USD is it. And are we doing something similar in Bitcoin? That's a question I ask myself a good bit, because for sure I live around a lot of blockchainers and people, working out these different platforms and everything. And, while I'm real passionate about like Bitcoin's going to be the way that we solve this problem moving forward, I never like say like, you have to use this, because part of me is like, okay, well, we got to let the market decide. But in doing that, it's like, yeah, I guess you're like leaving it open to just like taking a lot longer than we'd expect. Whenever I look at Bitcoin and the whole Feds thing, it just amazes me that we even got this far with banking and accountability and accounting and the way that people change value over hands. And I mean, it's something with Bitcoin and the internet that gives us the asymmetric information and allows us to see like an audible, scarce amount of something. It's whenever we actually have that to work with, it makes looking at the past seem very caveman like. And they did what they did to get where we are, man. I mean, it's one of those where I always look at it like, if we didn't have some of these problems arise and like these answers, like would we be where we are today? I mean, like if somebody didn't get in line and say like, hey, we're going to develop on this hardware set, and like and then eventually we create the UX that makes people the ability to actually work within a computer system. I mean, it's Bitcoin is tied into this history, and the history is still being written. I mean, it's a long chain of trying to get people to have a value transfer system that serves everyone. It's hard. Sorry, man. I'm going off and off because I mean, like, I could talk about this like over a couple of beers for hours.
Yeah, really, what I just wanted to point out is that the whole Federal Reserve being instantiated in the U.S. was that market panic in 1907, which pretty much resulted because of some idiot trying to short squeeze a company that just did not work out for him. But the one thing I want to point out here is that JP Morgan was approached to help bail out the situation very early on, and he refused to, and actually waited until the situation deteriorated way more than it initially did before him and others such as Rockefeller at the time stepped up to bail a lot of these institutions out. And if you actually dig back through the newspaper archives at the time, there is a lot of contemporary speculation of him intentionally doing that and stoking rumors of insolvency to push on the market panic, which was later used as the rationalization for the Federal Reserve Act passing. And as well, there was a lot of very valuable assets bought up very cheaply by influential people like Morgan and Rockefeller at the time that literally went on to be some of the gigantic corporations that have lasted for a century or more that were establishing themselves at the time. So in no way whatsoever do I think that sequence of events was entirely natural and had no artificial or manipulated component to it.
I think there is a more underlying problem here, right? Because the crisis happened for a reason. But if we go back a little bit more in history, that how the first banks has been, how they evolved, how they been created. It was people having gold and valuables in their own homes, but they didn't want to keep it at home because someone can come and kick them to the ground and take it away. So they took it to a bank where they safeguarded their assets, and then more and more people started to do it. And the banks then realized, hey, these people are bringing the gold in, but they don't usually take it out. So why don't we just, loan their gold to other people? And I think this is the underlying problem here, right? The Mad Gax effect, where you are giving out more than how much you have.
That's fundamentally no different than like diluting metal coins, though. I mean, that this kind of thing has always happened. And despite what a lot of people like to tell themselves, that's not impossible with Bitcoin either. Like there's literally nothing anybody can do to stop an institution like that on top of Bitcoin. It's
Much harder.
But
it's much harder because first there are alternatives, right? So you can keep your own money, and that's an alternative. You don't want to keep your own gold in your house because that's a dangerous alternative. That's one. There are more workable alternatives. And the other thing is that they won't expect anyone to bail them out because it's mathematically impossible to print more money and give them when they are failing, right? So they might be more careful with their reserve banking things on the exchanges, although they are probably doing that even right now in this moment, but not to the extent what the banking system afford.
Dude, you're missing the point, though. Before the Federal Reserve, that was the exact same dynamic. Like money wasn't printed out of thin air to bail institutions out. Like a wealthy person like JP Morgan actually gave them his money. Like they couldn't just print things out of thin air. That happened after the Federal Reserve was created.
Yeah, actually that makes sense, but that asks the question that what did we solve then with Bitcoin?
Well, no, I think you're missing the core point I was trying to make. The Federal Reserve being created was something intentionally done because they knew that they could be more blatant and extreme with that type of thing with something like the Federal Reserve existing versus the way things used to work, where you just had banks operating their own currencies on reserves, and if shit happened and somebody wouldn't bail you out with real assets, then you were just fucked.
Yeah, but that was a time where communities were a lot smaller, right? I mean, this is like it's getting into a history course here. I mean, for sure, it's there's a lot to take into consideration with all this. I mean, that's where it's like I see Bitcoin as continuation of this history. It's still going. So yeah, just like we're already pushing over 2 hours. So let's jump into this. What's going on with some mining troubles again? All right, sorry. Like, yeah, no part. Go ahead.
Oh no, I didn't have anything.
All
Go
right.
ahead with the mining.
All right. Okay. So it looks like Montana is suffering from a little bit of mining fatigue, combined with some well-known FUD about Bitcoin being a major factor in global climate change. Wired reports on Missoula, Montana, and their new approved resolution that requires new cryptocurrency mining operations to offset their energy use by funding or building new renewable projects. Local politician Josh Slotnick says, quote, "We looked at the potential for new Bitcoin mining and saw that we're never going to meet these goals if mining happens in the way it's been happening. The use is so extreme it dwarfs everything else in our country." Close quote. Right now, mining operations in the area employ 19 people and use around a third of the county's households in electricity. However, this is all from one mining operation that isn't even in Missoula County. Hyperblock is a Canadian company that works out of Bonner, Montana, and these new rules wouldn't apply to them. However, they have thought about expanding their operations recently, and that's where it does feel targeted at them. The facilities manager there at Hyperblock, Jason Vaughn, says, quote, "We are knee deep in the process of expanding, and now they are trying to change the rules on us," close quote. And he goes on to say it's misguided regulations because, quote, "they are putting up this propaganda that we are contributing to global warming, and yet we've been buying our power from the Kerr Dam. They are still going after us, even though we are doing things right," close quote. Hyperblock might not be held to this new standard as they've been going through the planning process for a while now. The county's sustainability coordinator, Diana Mineta, says this comes from looking at other areas where mining operations are more entrenched, like Eastern Washington. She acknowledges the challenges of installing new sources of renewable energy from scratch, but says that the county had identified a number of ways to help cover the required investment, saying as purchasing agreements to help fund projects. I guess we'll have to see, how this story develops. But yeah, Missoula, Montana is a unicorn in the state. It's the location of the state's university and really isn't a greater representative of the area. It's hard to say how this is going to affect the mining ecosystem up there, but for sure it's going to hurt Missoula's ability to help grow their technology sector when it comes to the mining ecosystems that are already there being developed. So, yeah, it looks like they're putting the brakes on this because they've been buying into a lot of the global climate change, Bitcoin mining FUD. But I mean, like I'm saying, it's a county that doesn't even really affect the only mining operation there in the state. But there are a lot of other mining operations that are trying to set up shop and they're trying to expand. And it looks like this little, would you say it a liberal college town, I mean, they're pushing back on this whole thing with that narrative we've been hearing for a long, long time now. So it's, I guess it's just like, responsive to all of that.
Yeah, this is kind of fucking infuriating that this type of bullshit narrative is actually like impacting actual businesses now. Like, who the fuck in their right mind is going to point at somebody buying electricity from a hydro dam and say that you are creating carbon emissions? Like, are politicians literally completely fucking brain dead? Are they that fucking stupid?
I'm afraid so, man. They hold their finger in the wind and run with it.
The answer is yes, which is why I'm an anarchist.
Yeah, I mean, you're right. I mean, it's why we're in Bitcoin. We let the processes of this whole weird anarchic organism govern itself. All right, so let's keep moving here. Where are we going? Got some Canadian darknet market money getting seized.
Yeah, this is kind of like, I don't know, this is kind of a troll by the Canadian legal system because, so a judge in Canada has ordered that 30-year-old Matthew Fan forfeit. By the way, whenever I see this guy's name, I can't help thinking about Kevin Pham. But Matthew Fan is being ordered to forfeit $1.4 million worth of Bitcoin that was found on his computer as part of an investigation into his activity on a darknet market involving guns and narcotics. And according to the Star, this is the first seizure of Bitcoin done by Canadian police. The seizure actually took place back in 2015 when the value of his Bitcoin was only $65,000. So that's a pretty big increase. In February of this year, Fan had a forfeiture hearing, and he argued that he should be allowed to keep half of the Bitcoin because, quote, not all were used for illicit purposes. And as far as I can see, the prosecution has not proven otherwise. Now, I believe in terms of fiat, if a crime occurs, there are two things that police can do with the proceeds related to that. One, they can do a very screwed up thing called civil asset forfeiture, where they accuse not a person, but an object or money of committing a crime. And so the object or money must defend itself. And that usually never ends fairly or makes any sense. The other option is that they can only seize funds that they can prove are proceeds of crime. And apparently in this case, the judge has decided that there is overwhelming evidence to suggest that Mr. Fan was using the dark markets to purchase illegal items such as firearms and silencers. But then there is a reasonable inference to draw the conclusion that the payment for such illegal narcotics and sales was made using Bitcoin. So, yeah, there seems to be some kind of expectation there's a different expectation for fiat that I'm seeing than there is for Bitcoin, because they're basically saying, like, because you use Bitcoin, we're going to assume that all of your money that you have in Bitcoin was used for that purpose. The weird part is, this is the bit of a troll. The judge said that they were suspicious. Well, this is in the article. The judge was suspicious but not entirely confident that the entire amount was used for crime. So they will allow him to keep $36,000 worth of Bitcoin. So if you can see what they did there, if the original value of the Bitcoin when it was seized was about $65,000 and they're saying, oh, you can keep $36,000, effectively, the judge has granted Fan's request to keep half, but that half is being measured in fiat as it was originally, valued in terms of the Bitcoin's value when it was seized. So I see what they did there.
Yeah,
That's shady as fuck.
Right. I mean, like, just, hey, your Bitcoin, you were using a darknet market. You might have been a trader. Doesn't matter. You were using a darknet market. We're seizing all your Bitcoin. That's oof.
Oh, and I should also point out, he hasn't actually been sentenced yet. So this seizure is not even part of his sentencing, which is really strange.
That's like seriously, like, what the fuck is going on? Like, he was just a purchaser of shit. Like, he was not selling things on the darknet market.
I think what he was actually accused of was that he was buying the weapons from outside of Canada and importing them. So it was some kind of import crime yeah.
But he was not like selling anything. Like, he was just purchasing things.
As far as I know, I don't think I saw anything about selling, but I didn't look at the entire legal document.
That is fucking insane. That's like catching somebody buying a fucking bag of weed and so going, we're going to steal your house. Like, what the fuck?
I mean, they've recently been doing that with people, go and buy a house or a car with cash, and they say, well, we're seizing all your cash. I mean, the civil asset forfeiture thing was just recently pushed back.
No, but that's the thing. Like, civil asset forfeiture, like money for criminal shit, that's if it is the proceeds of a crime. If you make money doing something illegal, not if you take legal money and fucking spend it on something illegal.
Yeah, so I just checked. So they're calling him a drug dealer, but it looks like he bought Bitcoin in order to purchase guns and illegal narcotics. It doesn't say anything about selling. And then he pleaded guilty of attempting to import a gun and possessing several illegal substances. And he said some Bitcoin was used to purchase. And so the only case where he was selling something was gold. He was selling gold, but that wasn't part of what he was accused of. But that's the only selling that he did. Everything else was just converting into Bitcoin to purchase other things.
Man, I hope they don't make a example of this guy like, Ross Ulbricht, where it's just like somebody who really believes in free markets and, anarchism and, this is all just technology and stuff that we should be able to use, and they're going to throw the hammer down on him. I hope not. But I mean, like, just like we're saying, I mean, this, like, just going after all this Bitcoin because of the use of a darknet market seems kind of, it's a little harsh. Yeah.
All right, well, we ready to move on to the next one?
Yeah, man, I know you got a lot to say about this. So inform us, what is going on with PewDiePie, man?
PewDiePie made an oopsie. So yesterday, I think it was, or the day before, PewDiePie pretty much shilled some nonsense of blockchain streaming video content on his YouTube channel and said he's going to start streaming on this. And so I am obviously very upset. I'm betrayed. I'm hurting inside. I'm crying. He's completely destroyed the faith that this 9-year-old had in him. But yeah. So to dive into this shitcoin platform he's shilling, I do have to say one thing. It is a lot less retarded than it could have been because they're not making absurd claims like storing videos on the blockchain. But it's still, like, when you really look at it, not the type of platform that's really going to, in the long term, solve any of the problem that a lot of these YouTube content creators are dealing with, that are pushing them to look at things that are more decentralized in terms of platforms to post on. And this project is called DLink or DLive, and it's built on something called the Lino network. And the Lino network is pretty much a completely proof of stake system that tries to incentivize infrastructure for content delivery instead of nonsense like Steam claiming we're putting everything on the blockchain. But when you really look at the incentives of this system, it's effectively the rewards get split up like this. You have 65% of all new tokens going to infrastructure providers. You have 10% going to app developers, 10% going to validators who validate the chain, 10% goes to content creators, and 5% goes to viewers. So at least in terms of the overall new currency supply entering circulation, it's actually worse than YouTube, which, if I remember correctly, only takes like 30% of the revenue that a content creator makes. And so, but I do want to draw the distinction of like what is specifically being given to the content creator versus the overall new supply in the currency system. But it's still like you're giving 2/3 of the new supply to the content delivery maintainers, and only 10% of that is going to content creators. And pretty much the bulk of a creator's revenue is just pure donations or paid subscriptions, which, like, it's really kind of confusing to me, given that you have things out there like BitChute, which use BitTorrent as a backend and don't have this whole absurd like proof of stake blockchain to finance things where everything just you give donations or you subscribe to a content creator. So really, like, it's like why do you have this nonsense cryptocurrency with this proof of stake system where the bulk of the money is going to a CDN operator when you can solve a lot of these issues in a much more decentralized way and still have donations and subscriptions go to content creators? And as far as the incentives in the long term, like you pretty much have to take your Lino token and stake it into something else in order to be a CDN maintainer, to be a validator, to be a pretty much any significant participant in the system. And they leave rule changes up to stake voting. And some of the things that these rules, I mean, obviously, like changing base consensus rules, the voting is irrelevant. People can just fork it and do whatever the fuck they want. But you can change things like, staking requirements internal to the system, like how much you need to stake to be a validator or an infrastructure provider. And given the nature of proof of stake, the biggest holders are going to get the biggest advantage of this. And if you compound and reinvest properly, are going to just pretty much centralize and concentrate things. I mean, inevitably, this is going to just devolve into a totally centralized system with a handful of people raking in most of the money, maintaining very centralized and efficient delivery mechanisms in total control of the platform, with content creators overall getting a very small slice of the money pie that's probably going to wind up being even less than centralized platforms like YouTube. So like why do you build this huge Rube Goldberg machine like this that's inevitably going to devolve into the same problems or worse than a platform like YouTube when you have things like BitChute or other platforms that are actually decentralized in terms of content distribution and just work on that patronage model where you just donate or subscribe to a creator to pay them, which is effectively what this whole Rube Goldberg proof of stake machine is, because out of the block reward, a creator is only getting like 10%. That's an insignificant thing. So it just really kills me because this is something I see over and over again with people on platforms like YouTube making content who are dealing with like these constant like persecution campaigns, censorship, getting their channels shut down, like being demonetized for arbitrary nonsense. They just keep flocking to these absurd shitcoin products and just completely flawed systems, thinking that this is going to solve all their problems. When at the end of the day, anybody who's even anybody who's even vaguely familiar with how systems like this work can just glance at this and see this is going to devolve into the same situation they're in now, or in most of the cases, something even worse. And it just fucking kills me to see this because there are actual viable, like resilient distributed alternatives that these people can start to use. But it's all of these ICO and shitcoin projects that throw together a huge marketing budget that always keep catching their attention. And it fucking kills me.
Yeah, I mean, sorry, no part. You want to go ahead?
Yeah, I just wanted to say to the guys from D-Link who are watching this and getting angry that know that Shinobi said it's a lot less retarded than it could have been. So I guess just take it as a compliment. It's the best you can get.
Yeah, blockchain project, and like a overall score from Shinobi. That's about the best you're gonna get. I mean, I think that's mainly to do with his affiliation with PewDiePie more than I mean, like I need to look into the network, but I know Shinobi's a fan of Pew. I'm not, but I do watch Tim Pool a lot, and he's also like just all about this Minds platform. And you know, he was talking about this story earlier, and he was talking about how, yeah, cryptos and blockchains are going to change the world, and this is all censorship resistant. And yeah, there's a lot of just like running with the language without really digging into it and understanding what's going on that gives Bitcoin those features. And like, do these other blockchains have any sort of semblance to that? And even so, I mean, like, you're still at the behest of usually a small development team and a small group of investors. And, you know, like we're saying earlier, I mean, this all kind of leads up to different legal definitions and, you know, certainly some areas and pinch points to make it not censorship resistant. So yeah, I wish that, you know, people would dig into this a little bit more before they just jumped on a platform like DLive or Minds and then just start pushing it from the rooftops. Because I mean, I think Pew's given away 50,000 of these Lena coins, $50,000 worth of these Lena coins to streamers. I mean, you know, and I mean, every episode of Tim Pool's news shows, he talks about go to minds.com. That's where we're at. And I mean, a lot of this is just like from, I imagine, like their inner circles and, you know, people within those circles that think they have a grasp on it and they point them in a direction. I mean, at least the Minds guy, I know the guy behind that has like that, you know, he wants everything to be free speech and he wants the platform to be, but it's, I don't know if he's just disregarding the fact that, you know, he's running the platform and if something's on there that the government doesn't want, they know who to go to, him. I mean, so yeah, it's just like, it's a big problem. I think the best people I've seen from the mainstream approach this was Dave Rubin and Jordan Peterson, who quickly said like, well, the answer's not there yet and we're looking for it. So yeah, I don't know if it's that much of a surprise. I know it's Pew and you got some special, you know, care for that guy and his content. And I know a lot of people do. So I guess that Lena network is going to go places. Same with the Minds platform. I mean, this is where I don't know if we're going to be able to, how this blockchain madness is going to take off with the next bull market. But I mean, it seems to me like it's not going away right now. Like this next run or wherever, it's going to get a little bit more crazy, I think.
Why'd you do it, Pewds? Why?
I mean, Shinobi, what do you really expect of a guy who got famous off of playing video games? That's basically what he did.
He is a genius. He puts up with the bullshit. He puts the 9-year-olds on the right path. And he made an oopsie.
The only 2 videos I think I've ever watched of his was when he played that game. I don't remember what it's called, but it has Slenderman in it. I watched him play that. And there was another one. What was it? I don't even remember. Oh yeah, chat. There's people who do like these chat relay things where they just show up on chat rooms and like surprise people. And I think I saw that. But other than that, all I know about him is that he's Swedish and he's famous on the internet and he has a lot of money.
Surprise people? You mean like with their penis?
Oh my God! Look,
no, Shinobi. I would not watch that if that was the case.
There is like another little to this where Tim Pool brought this up this morning and I heard him say it and I was thinking about it, like there might be something to this where, you know, PewDiePie has got a lot of that like negative connotation with this whole political correctness and like, you know, and like, are they going to start staining, you know, a bunch of Bitcoiners and blockchainers and say like, you know, every single one of them is alt-right and you're supporting Nazi groups. And I mean, like it could happen.
All right, though. Any more input on this or move along to final thoughts? All right. I will take that as final thoughts. So, all right, guys, first up, we saved this until the end of the episode so that we don't have to deal with you freaking out through the whole show. Guess there's no easy way to put this. For the foreseeable future, we are going to be going down to one episode a week on Wednesdays. Although, like today, if there's a lot of stuff to cover, we'll push a little over 2 hours. Just because of some schedule tightness on some of our parts, and also to try to kind of give some of us the time to work on a little different content and start getting that out there, just with the schedule complications we've been dealing with lately. So you guys can freak out now.
Yeah, I mean, like, legitimately, don't freak out too much, because I think you're going to get more content in the long run out of this, to where, like you're saying, I mean, we'll all have a little bit more time to work on other stuff, and, it'll be easier to bring in more special editions and, do things like that. And, I know that there's definitely some, stuff in the background of, like, getting some people from the past back in and everything. I mean, like, things are going to always shake up a little bit. Development doesn't stop. I mean, like, we kind of got efficient with things, and that's great, but, always room to improve.
Yeah, and I just want to say sorry to all the people who have been asking for shorter shows, that we're now going in the completely opposite direction of what you asked for. But I think we are also planning to timestamp the different stories, so that if you don't want to listen to all of them, then you can find the ones that you're interested in.
No, you'll listen to all of it and you'll like it.
No, like, actually, I've been timestamping along this whole way. And so from now on, whenever you come to our episodes, if you just want to listen to a particular topic, just open the description and there should be a timestamp for that particular story. So, get that little bit of efficiency gain there.
Yeah, I just wanted to say, for all those people who are asking for longer shows, that we are going to that direction. So that's a good news there.
All right. Yeah. So outside of that, other final thought: go to your meetups, support your local meetups always.
Janine, Nopara, any more final thoughts?
Oh yeah, one more. Most developers use Windows. Just to reiterate.
Because most developers are fucking idiots.
Oh my God.
My only final thought is that if you haven't heard, on April 4th, the support network for Chelsea Manning announced that she's finally been moved out of solitary confinement, which she was in for 28 days, which is, 21 days at minimum is considered torture by the United Nations. But she's now been moved into Gen Pop. So, still really, really angry that she's in prison at all, but at least she's not isolated. That's even worse.
Yeah. All right. And I guess my final thought is gonna try, we're all gonna be kind of working on some new content in parallel here. So with mine, I'm going to apologize preemptively for trying to be a little more noob friendly, which is probably going to make some of you a little angry. Sorry, but it's got to be done. All right. And I guess that wraps her up until next Wednesday. Try not to lose your mind, guys. And I will remind you, because we haven't in a while, go to dragonsden.io. And if some of you are fiending for conversation and stuff, some of us hang out in there all day and chit-chat Bitcoin. So open room. Everybody's welcome. Adios till Wednesday, guys.
Later, everyone.